Hello, everybody. Welcome to TraderMerlin Show. It is your weekend edition. Hope you had a great day out there today. As Brendan says, it was kind of boring. Well, there were some nice moves in the crypto space, but overall, wasn't the best day out there. Of course, I had no time to look at anything because I was in a symposium all day. Actually, I was kind of dreading it because it was just so much time and effort to put this thing together with regards to my presentation and moderating a panel, but it was actually a lot of fun. And one of the joys I love is hanging out with some of these guys. And for those who don't know, I had a chance to hang out with Bashir Chaya, who gave a fantastic presentation, kind of big picture, strategic investor type of approach. You had Sean Reed, who talked about selling premium and just did a phenomenal job as well. Bob Dunn, who's always entertaining. You had David Warner, which talked about his dime theory. And what I like about David is it's like, I'm not worried about the past. Let's just look at the chart for the future and see what happens going forward, which is a nice perspective. And then also Jeff Manson, talking about training your eye, which is something that I've definitely spent a lot of time trying to do. And there's always new things to see and understand about the markets. But it was great to get all those guys in the same room and do kind of a panel discussion on, what is this housing market bubble or the bond market bubble or equity market bubble. And you see some general threads from all of them, which was really, look, these markets are going to continue up until they don't. We can all come up with ideas about a bubble or what we think is going to happen, and bottom line is the market's going to do whatever the hell it wants to do. We can think something is so ridiculous and stupid that it just doesn't make sense, but if it happens, it happens. It's just the way life is. And as my mentor told me many years ago, he says the market will tend to do what the least people think it's going to do. When everyone thinks it's going to do something, that's usually when it goes the opposite direction. And most people think that it is in a situation where we should crash, which actually makes me feel like it should continue on up then for that reason. So it was an interesting perspective and event today. So I'm glad that Tom Messina, glad you enjoyed that one. Tom, I saw you in there as well. Sorry it crashed, but hopefully you enjoyed that. As I said, you like Bashir, so I thought he was pretty phenomenal. I watched every single one of those presentations, so it was a good time for me. All right, today's show, I'll probably keep it rather short. I'm a little bit tired and long-winded since I've been up since the wee hours of the morning to get all this stuff done and was up till 1:30 in the morning fixing a presentation to give out today. So I'm going to go through a couple lists of questions here, and then it was like a 5-hour TraderMerlin show. Yeah, it was, with 1,200 people in there. Actually, there was 1,500 people in there at one point. It was pretty awesome. I really enjoyed that. It was great. Okay, so let's go into what we're going to talk about today. We'll go to this screen over here, and you can see Trading Week wrap up. If you guys guess where this is at, I wish that I was at an event today in Miami. I think that the event that's going to take place in Miami today, or over the weekend, is probably one of the more influential financial and economic events that we're going to see for many, many years. There's over 50,000 people going to this event in Miami, which of course is the Bitcoin conference. But I was watching a video by Vitalik Buterin yesterday. I saw a great video by Charles Hoskinson this morning talking about, just kind of what's going on there. And it's unlike any tech conference. I mean, he's meeting with secretaries of state and prime ministers and major industry leaders, governors, presidents, talking about digital assets and how that might impact the marketplaces and how they can be utilizing things like Cardano, which is what Hoskinson is behind, or Ethereum, which is what Vitalik is behind. And it's just fascinating to me that we are right in the midst of this thing as it's literally exploding as an ecosystem. So I'm very excited. Brendan says, buy the dips. I agree. You just got to have some patience out there because there's going to be some rough sailing along the way. But, my argument has been the dot-com bubble was started by institutions and the retailers were left holding the bag. This is something that was started by the retailers, and the institutions and governments and banks are just now coming on board with it. So to me, it has a very, very bright future. So I wish I was in Miami to enjoy this picture right here and ride my bike around, but I have the same, maybe even better scenery here in Southern California, just without the Bitcoin. All right, let's see. I'm going to bring this one up since more people have sent in. If you see your name on this list, I've got me, Catherine, Jerry, Thomasina, Alan G, Brendan, Sue, Leslie M, Tom B, Kevin, Les G, and Simon sent one in. He's going to write 1,000 words per day on the book that he's working on. I see a couple people working on books. I'm very happy to see that. Glad you guys are all moving forward on it. Again, it's a weekend, so you guys got to do this stuff on Saturday and on Sunday as well. Every single day for the month of June. I'm sticking with it. I hope you guys do as well. All right, let's go to what happened today. Now, the numbers weren't really I don't think the numbers were that great. If you look at the unemployment number for the U.S., you can see here unemployment number came out at 5.8%. They're expecting 5.9, so it's considering continuing to slide, which of course is good. It's better than expected. When we see that number get lower and lower and lower, unemployment means that markets are getting back to normal and things are starting to move, and hopefully we see this economy get back on track. Non-farm employment change, there was definitely a lot more jobs created, but not as many as expectations. That was a big miss out there. And average hourly earnings, we saw that drop compared to the previous number, but nowhere near expectations. So mixed news out there with regards to the economic announcements, none of which I feel was that monumental for today. Now, there are obviously the question lines are always open, as you guys can see here. Oh, by the way, I forgot. Cheers! I didn't get a chance to have a glass of whiskey when I was on Online Trading Academy time, but since I'm on the TraderMerlin show and it's under my corporation, no one can sue me for having a glass of whiskey on my own show. Cheers to that one. Hope you guys enjoy it. Going to some nice Irish whiskey today. A smooth sipping whiskey. Much needed after this day. All right, let's go to your first question now. I have two specific equity questions that came in. I have one that was about a kind of a basket and kind of price tracking. And then I have another question that came in dealing with scaling into positions or adding to positions when things are rocking in your favor, which I think is a very important thing to do, especially when we have strong trends. So first question. And of course, if you have some, guys, I'm more than happy to answer questions here as well. Kevin says, I never hear you talk about Apple. It's the greatest company. I don't know if you're asking me to say something there or not, but I'll tell you what. I'm still not a fan of Apple, but the reason I don't talk about Apple isn't because I'm not a fan of it. It's just I don't make trades in it. So a lot of times I'm bringing up things that I actively trade. I cannot trade Apple. I'm not allowed to. That's a self-imposed rule, but that goes all the way back to, God, it's hard to believe it's been 20 years since I pulled the trigger on Apple. 2001, I think, is when I put that in my trading plan that I can't trade Apple anymore. And it was simply because it was one of those stocks I look back on and for some reason, I just kept on losing. So I said, you know what, screw it. I'm not going to trade Apple anymore. That's the only real reason. If you guys want me to look at Apple, I'm more than happy to look at whatever stock or price chart you want me to check out. So let's go and check out the old double APL. I was looking at Amazon today, but here is Apple. When you look at Apple, obviously it is the biggest company in not in the world. There are some companies that may have a bigger market cap, like Gazprom and maybe some of these other ones. But you look at what's going on with it, it's not that exciting, right? You could make the argument that yes, we are still in an uptrend. Granted, the trajectory, and let me go here and draw some trend lines on it. This is one of my favorite things to do. Is it doesn't have to be precise. It's just to get an idea of angle. So you can see that the move from, call it February, March to where we were in July and August, I mean, that was a pretty steep slope. But if you look at where it's at now, it's really, the trajectory has changed quite a bit. So for me, this was, I did an options trade. Sorry, don't try to call me out, Walter. I see what you're doing there. I did do I think it was 2 or 3 years ago, I bought puts on it. So I haven't technically traded Apple. I've traded a derivative of it, but that's the last time somebody called me out on that one. I was like, you know what, you're right, I shouldn't do that. So no more options on Apple either. So thanks for ratting me out, Walter. Going back to Kevin's question here on Apple, or statement that he says, I never hear me talk about it. Look, I think Apple has a dominant foothold in its marketplace. I think you're going to see more increased competition. As long as they keep rolling out their iPhones and keep everybody hooked to that digital drug device, they'll do well. But the trajectory of what's going on with their share price, it's certainly slowed down. And what's more important isn't the line under the lows. Look at the line that's across the highs. And I'm cutting out that one outlier blip on there. But really, it looks like it's getting weaker. And if we just take it a step back and look at it from a simple perspective of, as you guys know me, I like to dummy things down to its core. And that when I say dummy it down to its core, it's either a buyer or it's a seller. Now, we can make other reasons for what might be moving it, but bottom line is it's a buyer versus a seller. And on this price chart, we can see that the buyers have been holding their own. They've been, making higher lows. It's not fast, no real strong accumulation, but they've been making higher lows. However, the sellers have been stepping in and not allowing this thing to rise higher, which tells you that there's doubt by a lot of people, that this is going to be moving higher. And maybe it's overdone. I mean, certainly we were down at the $50 mark back in 2020. We peaked at over $140. That's a pretty good run on any good year estimate. So to me, I'm not actually a big fan of Apple right now. I feel like it's slowing down. Could you be buying now because it's at the bottom of down the lower trend line? Sure. I think you could make that argument. And Alan points out a good point here. He says Apple volume is slowing too. Yeah, the volume, as you notice this blue line at the bottom, I'll make it bigger for you guys. It is. It's slowly drifting down. And that's not necessarily the end all be all, but still trading 74 million shares today. That's plenty. But I'm going to look for something that gives me a little better probability. I would like to see a stronger trend. I'd like to see, a better price pattern than something that, for all intents and purposes, for me, looks like it's just consolidating and compressing here near the tip of this triangle. So not that big of a deal for me on Apple. I would probably move on to something else even if I could trade Apple. And there's plenty of things out there. So Kevin, there you go. You say it's the greatest company. That's obviously subject to interpretation and opinion. They have the biggest market cap right now, but other than that, it's still Apple. I don't like Apple. I would say Amazon. If I was looking at a long-term buy, I would take Amazon, but look at that price chart. This is actually worse than Apple, right? We've had the same run-up. I mean, the trajectory here, unbelievable bump to the upside, but now it's just really just sideways we've got those lines drawn on the chart. It's kind of funny. It has really just been traversing sideways in that range between, call it 2,900, and we could bump this up to the very tippy top just to make sure we get those last two touches in. You're looking all the way up to about 35. Yes, that's a massive range. That's a $600 move, which is great for any spread trader or somebody who's looking to short at supply or buy at demand. Great opportunities, but long term, it just feels like it's traversing sideways here. So you're waiting for that big breakout one way or another. There we go. Oh, Nvidia. I think, God, you guys might have to tell me. Did I go? I've done so many shows. By the way, this is the 100 and today's the 103rd show because obviously I upload the podcast and keep track of everything. This is the 103rd show I'm doing for TraderMerlin, which is kind of interesting. It's been a while that we've been doing this, so let me see. Okay, hopefully we'll do a lot more than that. So I don't remember if I talked about Nvidia the other day. So I think there was somebody who was asking me, what are your thoughts about going short on Nvidia? And I was like, oh my goodness, I would not be shorting Nvidia. Absolutely not. And I think it was actually, maybe as we came into this high, I think you're crazy if you short Nvidia right now. Yes, Nvidia is doing, I believe it's a 4-for-1 split. So, no, don't short it. You want to see what happens when something does a 4-for-1 split? Here, let's take a look at the last one, which is also going to be TSLA. This is what happened when Tesla did its split, or is back here. It went from, I got this dragging tool on. Tesla went from roughly 275 up to 503. It almost doubled in price, all right? Almost doubled in price when they said it was going to split, and then this next move was being added to the S&P 500, which is an even bigger, just crazy move. So you look at Nvidia, which I'm with Larry. When Larry bought this thing at $39 and it got up to like 60 something, and he was on Power Trading Radio, I was like, sell it, dude, lock in profits. He's like, nope, my target's 500. I'm like, okay. Well, it got to 500, and I think he raised his target. I think Nvidia is probably in a much better position right now to keep on moving to the upside. So I would not be thinking about shorting Nvidia, especially when a company does a 4-for-1 split. It's a different thing if it's a crappy company that does a 4-for-1 split. It's a different thing if it's not involved in indexes. Well, Nvidia is in multiple indexes, right? So it's a pretty critical thing that when it splits, there's going to be more demand for it. And I certainly would not be shorting Nvidia, even though it looks like it's way overextended right now. It's gone from $550 to over $700 in just the past couple of weeks. Yeah, it looks way overdone. However, it could go much, much higher. I mean, honestly, the way that Tesla moved, could Nvidia hit $1,000? Yeah, absolutely. Big Eb says, I love it. This is the beauty of trading psychology. Big Eb says, Nvidia will keep going up since I sold most of it. That always happens. Yes. And I'm with CG. I'd much rather be going long. I'm not buying right now, but there was a great breakout trade above 650 that just happened a couple days ago. So that may have been actually when that question came in about shorting Nvidia, but no, I would not be shorting Nvidia as well. All right, yeah, thanks, Big Eb. Cheers to 103 as well. It's funny, I forget the exact number we did for Power Trading Radio, but it was something like 2,500 shows we did for Power Trading Radio. crazy to think that, you have these Jon Stewart, right? Or you have these TV show hosts, and it sounds like they're on every single day. No, they're not. They repeat like a 6-week period where they just take 6 weeks off and take lots of time off. I don't get 6 weeks off. Different. All right, so cheers to you guys as well for the constant support. I'm surprised none of you have left. I think I will buy Nvidia leaps and ride it up with the trailing stop. Yeah, why not? You get to see how much you're paying for them. I think the expectation is right now that these things are going to keep on moving up, so you might actually get a little bit expensive on those, more so than normal. All right, next question. This is from Lee. Thoughts on Tesla? I think I already went over this one, but we'll look at Tesla again. Here's your Tesla chart. I'm looking at it, and I really, I've watched a few videos recently which really make me change my tune on the company. Elon Musk, of course, I think is just crazy. I think he's off his rocker. Depends what he smoked or drank that day. He's nuts. So. But this is actually forming a pattern that, for me, is really one of my favorite patterns to see. And I think you guys can see it forming there. It's actually a very negative pattern. I hate to say it, but, it just looks very bearish. And that's called a descending triangle. And all a descending triangle is where price has basically trended lower like it is. You can see that top line I'm clicking on right here. It's making lower highs. But the lows come in and stay right around the same point. And you can see the lows is this black line here. It's like just dropping a ball on concrete. It's hit that 540 mark, and it's bounced off it twice. If we get a break below that, you have some serious unfilled gaps here that could close very quickly on Tesla. Elon Musk is not really doing any favors to himself. Yeah, I agree. I saw the comment from here. Walter says 400 seems like a good price level. Yeah, 400 is pretty much right at the origin of this gap. 400, 409. That would be a great opportunity to buy back into Tesla. Now, if it does break, you got to wait and see how fast it falls. I don't think it'll fall dramatically simply because of how many institutions are holding this thing, but if we do the classic measuring object, I know you guys probably hate this, but if I do this measuring object, which says from the peak of that descending triangle to the baseline here, if it were to break, where would it fall to? And that would give us a price target of about, lordy, $182. And notice there is a demand zone right around 193. Now, I think that might be a bit crazy, but there are people out there who are shorting it, right? There's the guy that did the big short. He's isn't it like $500,000 or something he's got on short? I think he said he had $500,000 put options or something, $500,000. So he's got a monster amount of money betting short on Tesla. And you know what? This price chart, it confirms what he's saying. It does look like it's getting weaker. Of course, at this point, you don't short right now, Tesla. You wait for it to break and close below that horizontal line. That's the safest way to do it. Yeah, Michael Blurry. Hey, those guys, just play big. 300 and 200 are good solid numbers as well. Again, going back to those round number psychology, right? You can see that there's some interesting numbers. Right here, you've got that 400 mark, which is the origin of this gap that goes all the way back into November 16th of 2020. And then down here, which is the really appealing one, is be right around $200. That's an interesting level as well. Should you buy naked puts? I have no problem buying naked puts. It's just you got to understand that those premiums are probably relatively high and they may expire worthless. So, I buy naked puts all the time. When you're buying a put, remember, the only risk you have to you is the premium that you paid for the put. Much different than selling puts. But yeah, I buy them all the time. And a lot of times I dump them early or they get out. Burry, not Blurry. Thank you. Yeah, I was going to say, I'm pretty sure his name wasn't Blurry, but Burry. Michael Burry. Great movie, by the way, Big Short. Now, who knows what information he has, but, I look at Tesla. Personally, I think it's overvalued, but the prospects for that company are phenomenal. Like we talked about yesterday, if they can get that driverless car first to market, boy, they could really just blow the doors off of any competition there with that AI. All right, so that was Lee's thoughts on Tesla. Let me go to this one from Jeff. Jeff, who might be with us today. Jeff says, for stocks or ETFs that you want to hold for the long term, like MJ, ACB, BLNK, basically certain types of markets that are expected to grow over the next 5 to 10 years, what style of managing these is best? Just buy and hold? Do you use a stop loss? And if so, what's the strategy for stop placement? Okay, that's a challenging one. There's a lot of pieces to it, and since the whiskey's not making anything blurry. My left eye, I've got issues with my left eye, which sucks about getting old. But yeah, my left eye is blurry, but I'm not blurry. Let's see. There's a lot of variables here, Jeff, which makes this one rather challenging. And if you are, and this is just my opinion, take it for what you want. If you're looking at something like MJ and you believe in the 5-year prospect for the industry, then that's one, I'm going to get hate mail on this one. That's one where you don't necessarily have to use a stop. And the reason I'm saying that is you're telling me that your belief is, I believe in this sector going forward and I'm going to hold on to it no matter what. Then okay, you don't have to use stops there because you're getting the benefit of diversification within that portfolio. If you buy something like ACB or Tilray or Cronus Labs or any other cannabis stock, I would always say to use a stop loss in there because you don't know if one company is going to go bankrupt. If one company goes BK and it's part of that MJ index, it'll bring it down a little bit, but it's not going to kill it because you have all those other ones to buoy it out. So if it's an ETF that is diversified and you know that that's something you want to hold for the long term, then I would say you don't necessarily have to have a stop loss. So let's go to MJ. And here you can see the daily time frame of MJ. We came right back up. We got a tiptoe above that line we talked about. It's kind of interesting when you looked at that price action. Well, I'm so used to multiple platforms here. We talked about a close above this line right here. It didn't close. It tiptoed above it yesterday, but came right back down. So for me, it's still in that no man's land of waiting for it to close above 22. I know it sounds trivial, but rules are rules. So it's still basically got a downtrend intact. Hasn't made a higher high yet. So I would be a little bit wary about this one. But again, if you're looking for 5-10 years down the road, buy something that you're comfortable with, and you can probably pretty much just forget about it. Okay? What about ACB? All right, this one looks better. ACB has started to make new highs. So that obviously has broken that downtrend that we saw since February. It's looking better, but again, I don't know the financials, the fundamentals, the prospects, or anything about really ACB's business operation. So for me, it's taking on too much risk to say I'm just going to buy this and not have a stop loss, right? So if you're buying something like ACB, you have to determine for yourself where that stop loss is, and that's going to be based off your risk capital, how much money you can afford to lose. Obviously, technical analysis should play a part in it, but and position sizing. So these elements, those are things that you're going to have to do. I really can't make any investment decisions for you because it's your money. It's not my account. I personally would not buy ACB solo. I would not buy Cronus Labs solo without a stop loss in place. So let me see, Cronus Labs. Same thing as ACB, right? It's just rocked up, broken up above those highs we saw from late April, which is great. That's a sign of potential reversal, but still, who knows? Who knows if this company is a total fraud and they go bankrupt tomorrow? Anything can happen. The longer you do this, the more you see the fraud and manipulation and garbage that goes on in financial markets. So long-term investing, you got to be careful holding on to specific companies without a stop. This one's actually an easier one for me to look at and say, where's that stop loss? For me, it's below $7. You can see right here. That's been where it's been challenged in this recent downtrend. So move your stop loss up if you're buying it and keep a stop loss in there, but maybe you leave a wider stop loss. So let's say, what was one you wanted? ACB. Which this one's much more challenging because current price is $9.16. That low that I see here is right around $6.50. I certainly wouldn't let it drop 30% before it stopped me out. That would be a little bit too far for me personally. So one thing that you could do, Jeff, is when you're in something and it starts to move, like you see here. So let's say you bought, I don't know, pick a point. Let's say you bought it at $7. You can start moving stop losses up based off of a variety of things. You could do the old school technical analysis one, which is move the stop loss up below the low of the previous day. But if you are looking for long term, that's not going to work. You're going to get stopped out right away. So, do you end up using something longer term? For example, let's go look at moving averages here, which is another valuable tool for anybody looking long term. And I believe this is a 2050. Oh no, it's 5200. Wow. This is a 5200, and you could, if you bought in, all right, well, maybe your stop loss is if it crosses down below, let's say the 50. I personally wouldn't use the 200. I think the 200 is way too far out of the money. By the time you hit 200 or breaks 200, you usually get back way too much. So that's how I would be doing it, Jeff. I'm using this maybe as a trend indicator to keep you in it. And the longer it runs, great. But the moving average will help you get out of things. Personally, I don't like to use my moving averages as stop losses. I'm using supplier demand zones. So a little bit different methodology because I'm usually not looking at 5 to 10 years unless we're talking about digital assets and crypto. KOPN for Dr. Stephen Kral. Good to have you with us, Doc. KOPN. Looks good. It's scary because obviously this thing was trading at $2 just a year ago, so that's obviously scary when you look at something that's gone from $2 to $13 in a very short period of time. It's just now starting to get better, in my opinion. You know, you look at the price chart here. This peak that we saw going all the way back to the 16th of February of this year, it was really making lower lows, lower highs, lower lows. This is the first time we've really started to show some strength. Unfortunately for me, the real trigger point is going to be right around this 950, which would be this peak that happened on the 27th of April. You know, it's got to get back above that to really prove to me that it's breaking this trend. It's a little challenging for KOPN, Koppen Corporation. But all in all, it does look good right now. You're just broke above that 50-period moving average. You're certainly above the 20-period moving average. If you do something like this, let me take the 200 out because 200 is too big for most people. And there's your 20. So now you've cupped above the 50 and the 200. Looks great from this perspective right now. Just makes me a little nervous because since last February, we are still in an overall downtrend. Let's see if my name comes up as an orange box like the other chats. Nope. No, you're CG. You're good. This is the first time I'm at home drinking on Friday. I could do this all. Hey, well, cheers to that. This weekend, it's going to be a good weekend. This has been an incredibly stressful week. For those that might not know, I agreed to work with Online Trading Academy and build them a cryptocurrency program, and I'm very excited about it. Not just the program that we're building, but the scope and depth of it and what might come down the road as far as specialty programs out of it. But you know, I think you guys have a huge head start on most people out there with regards to your cryptocurrency experience, not just from what I'm conveying to you here, explaining to you here, but you also have some great people like Brendan in chat and Tom who's always talking about cryptocurrencies and explaining their points of view and how things work. So to me, the crypto space is exciting, and I think it's going to be continually dynamic. But I'm up to the wee hours of the morning, guys, building this content because we want to get it done as soon as possible and get it released. And there's a lot of modules that I'm building on everything from the basics of understanding things like coins and tokens to going into the in-depth consensus algorithms of proof of work, proof of stake, directed acyclic graphs, staking, mining, yield farming, liquidity pools, all that stuff. It's crazy how in-depth this can get. And what's interesting for me about crypto space in particular is this evolutionary process. It's happening so unbelievably fast. There's some things that were popular 6 months ago that are all of a sudden just not popular at all. I know Brendan's going to hate this one, but NFTs. God, I mean, you go back, it wasn't even 6 months. You go back 3 months, NFTs were like the hottest topic on earth after Beeple selling these paintings for these digital assets for tens of millions of dollars. The market for NFTs has just cratered, and it's still there. It will still be there, but it won't have the same. It may not have the same luster that it did back just a couple of months ago. So you usually don't see things change this fast, and I think we're going to continually see this in this space with the evolution of digital assets. So I'm excited for it, and look forward to letting you guys know more about the release date for this class, which is going to be very, very quick. Walt, you want a discount? The good news is that crypto class, it's not going to be a high price point. It's going to be a very low price point. I think. We'll see. All right, what else do I have? Let's see. Shane. All right. I worry about quantum computers being able to hack cryptocurrencies. Love it. It's a great... I love that you set that one in, Chuck, because we know that there are quantum computers out there. Google's boasting about theirs. And let's say you have SHA-256, which is the algorithm, the consensus algorithm behind Bitcoin. One of the most secure algorithms in the marketplace. If a cryptographic or a quantum computer can actually get close to hacking that or cracking it, what's to prevent them from changing the consensus algorithm from SHA-256 to SHA-512? That level of difficulty change, even quantum computers would take a lifetime to hack a specific address. And, to me, that's what I think what will happen. You'll see the back-end engines of a lot of these cryptocurrencies, if quantum computers come in and start to threaten that space, they'll do that. And I share your concern. I thought about that too. Like, man, I have a computer running here all day long, 24 hours a day, trying to, let's just say, hack Bitcoin. And if it does, well, then we'll learn something from the process. But I've got a standard computer. Odds of me hacking anything with that thing are zero. Or 0.0000000. I could sit here all day and say zeros with a 1 at the end of the show, and that's basically it. Daniel, we're drinking, today is Tullamore Dew. It's an Irish whiskey, very smooth on the rocks. That's what I wanted today. Mario, a quantum computer is just a computer at another level. It's basically tailored just to do microtransactions, and not transactions, but microprocessing. So computers today have a specific speed that they can run at, a number of transactions they can do. Quantum takes it exponentially higher, so they can be doing trillions of transactions. And that's kind of what you need, or trillions of operations or processes. The more processes you can do per second, the greater threat you are to hacking something like a Bitcoin or Ethereum or anything that has a cryptographic function behind it. Nice. I was going to go with craft beer, but it's been a stressful week, and I really wanted a glass of whiskey today. So here we are. Only one, though. You guys always give me a hard time thinking I'm hammered on the show. I'm just having a good time. All right, next question. What time are we at? Holy cow, I thought it was going to be a half-hour show today. Here we are. Shane says, I keep hearing about soaring costs of lumber futures, but when there are only 1,200 near-term contracts and very little after that, I wonder how much the supply, it's actually manipulated. So basically saying, is there manipulation in that lumber space? Yes. And it's not just the lumber futures that are driving it. I haven't looked at the exact numbers of contracts out there, but sure, this is not one of the more popular futures products, right? It's not like the S&P or oil or even wheat or soybeans. Those are much heavier traded. So when you do have the illiquid markets like that, when there's not a lot traded, and you guys hear me talk about this all the time with regards to cryptocurrencies or even stocks or futures, if it's an illiquid market, the ability to move things up and down incredibly fast is easy. It doesn't take much effort at all. Well, if you only have a few thousand contracts traded for rough lumber, then yeah, you're going to be able to manipulate that thing. And if you look at the price chart for lumber, let me see if I can bring that one up here. What was interesting for me is the number of lock limits. And if you haven't, you know what lock limits are, I would encourage you to go. It's one of the first shows we did on this program when COVID hit and we were lock limit down. I think we lock limit down like 6 times. I'm like, you know what, let's do a show on that. This thing is absolutely nuts. And because it's so illiquid, it doesn't have a lot of people trading in, it doesn't have a lot of volume. So not only do you not have the liquidity, you just have the actual number of shares is gone, or contracts. See how all these candles look kind of strange because they kind of open near the lows and they close the dead high. This green one right here, I'll make it as big as possible. Let me move this around. I'm going to start here at the top. Let's go back to May 10th, 2021. You guys see here, there's no wick at the bottom. You know why? Because it's lock limit down. This was lock limit down. This was lock limit down, lock limit down, lock limit down, lock limit down, lock limit down. I mean, this thing, 1, 2, 3, 4, 5, 6, 7 out of 8 days, this thing lock limited down, and that's because of illiquidity. And of course, that's just the nature of the beast. If you want to know more about lock limits, go back to, I think it's called How to Trade a Lock Limit Down on the TraderMerlin YouTube channel. We did that one back in, I think, February or March of last year, which actually was a great show. I've never actually seen anybody go as in-depth as we did on lock limit downs. So, Shane, I do believe it is manipulated. It's also manipulated to a point where they can't manipulate it more because it lock limits down. So even if it's manipulated, they'll stop it at a certain point and open it up the next day for trading. Let's see. I saw a whole bunch of question marks. Remember a token that allowed you to get... Oh, 1 second. Here. I remember a token that allowed you to get ownership on people, like a sports star. That was an NFT. It wasn't an... it's... You're talking NFTs, and that was basically you have rights to whatever is behind it. It wouldn't give you the rights to the person, but there's some image or graphic or picture or something that was tied to that. The idea, but yeah, I don't know if I don't remember that one, Medic. If it was an ownership on people, slavery's kind of done. Let's get rid of that horrible fucking thing. Let's see what else we got. Companies are still a long way from cracking crypto. Yeah, I agree with you, Brendan. I think they're a long way from cracking crypto, but they are there, and I'm pretty sure they're running. I'm pretty sure people are trying to crack cryptocurrency, etc. You say, does that include Dogecoin? Are you referring to being cracked? Yes, because Dogecoin is a proof of work algorithm. It's basically a knockoff of Bitcoin. So it operates with the same basic functionality in the back end. They've changed some things in the code, but it's still proof of work. And that's the same thing. Yes, they could potentially hack Dogecoin, Ethereum, all of them, all cryptocurrencies, because they operate off of a cryptographic hashing function, meaning it's code, it's numbers, it's computers. There's always the potential for hacking of those cryptocurrencies. Okay, where to go? Let's see. Let's see. Any video on finding intrinsic or real value of a stock? I don't have any on that. Sorry. It's already there. All right, what else do I have? I had one more. I think I had one more. This is from Alan. Okay, this is an interesting one, and maybe this will kind of wrap up my show for today. It's a long-winded question, so I know I've got people listen to podcasts, and thank you guys for the podcast. I've noticed it's slowly going up on iTunes, so I appreciate your listening if you made it all the way through. So here's the question from Alan, and Alan, thank you so much for listening to the show on a regular basis. It's a long-winded one, but let me read it to you. He says, I've heard someone say that 80% of your profits come from 20% of your winners. I'm going to stop it right there and say, yes, done correctly. And why is that? Why should 80% of your profits come from 20% of your winners, or 20% of your trades? Because you're letting those winners run, right? You're keeping those losses small. You let winners run. So you've got 20% of your trades are the real big stuff. And actually that numeric equation that you're doing almost says to me that you could fail 4 out of 5 times and still make money. And I believe that wholeheartedly, simply because if you keep stop losses small, you don't lose a lot, you'll have 1 or 2 big winners that erase all those losses and much more. So yes, Alan, I do agree with your statement there, or the statement that you heard, which is that 80% of your profits come from 20% of your winners. He says, so why not accentuate the winners? I've often heard those traders talk about these A+ setups, not so much from the frame of risk management, but rather how much size can I put on because of their confidence in the trade. But obviously, nothing is ever 100% in the markets, and there will be occasional big losses that result from those anticipated home run trades. Do you have any suggestions on when we recognize these familiar trades, how much we should size in that we're not overexposed, but also extracting maximum profit? I don't necessarily have any specific rules that I can say that you should be implementing. I know what happens with me. So for me, so if let's say I identify a trade setup that looks amazing, and let's just use Tesla as an example, right? Tesla has a nice descending triangle. It looks like it could potentially have a nice downside move here based off of that pattern, and you all know I love that pattern. So let me bring it. Oops, I'm trying to bring up TradeStation for you. TSLA. So here's Tesla, right? We got the measuring object and everything. And I look at this and I go, yeah, it does look very bearish. Let me get all these lines off because I feel like they just distract me. There we go. Does that mean that I found this pattern? Do I call this an A+ setup? Yeah, I love it. It's definitely in my A group. I love this type of pattern. If it does end up breaking down below that low of $540, does that mean that I just go all in? That I load the boat because I go, oh, this is the trade? I personally do not do that, nor would I encourage that or ever want to do that. Why? Because I could be wrong. And I usually enter something a bit tentatively, right? I want to make sure that it is doing what I think it's going to do. If you go all in on that Tesla trade and all of a sudden it rips back to the upside, you're all in. And all of a sudden you could take a significant loss. I like to what's called scaling in, some call it snowballing in, which is once it moves to a particular point and maybe I get into profit, I'll move my stop loss up immediately to break even, but I'll also double the position or add to that position. And as it continues to move, I snowball and I'll keep adding more and more and more. Now the challenge there is this. Let's say you bought stock X, Y, and Z, and stock X, Y, and Z is moving up and it has a daily ATR. I'm going to use the daily as an example. Daily ATR of $1. Okay, so I buy it and I go, I've got a maximum risk of $100. Okay, ATR is $100 risk. That means I'm going to be in starting with 100 shares, right? Just keeping the numbers easy here. So I've got 100 shares, and all of a sudden it starts to move in my favor. It's now moving up. Great, I like it. I move my stop loss up, and now I buy another 100 shares. Well, if I'm keeping that same stop loss of $100, it now just has to drop, let's say, 50 cents, right? Because 200 times 50 is $1. So I got to be careful there because the more I start to snowball in or add in that position, I have to take into consideration it doesn't need to fall as far for me to give back all those profits. So as I start to snowball into a trade, scale into a trade aggressively, I'm constantly moving that stop loss up, and most of the time it's actually getting much tighter and tighter and tighter. I'm not letting it have the wiggle room that I normally would have started out with, if that makes sense. So I start off with, a normal amount of wiggle room on that trade. And I'm going to use things like this supply and demand zones. I'm going to use ATRs, whatever factor I need to figure out what my initial stop loss is and position myself accordingly. As it moves in my favor, I'm adding to that position and getting tighter. That stop loss is no longer going to have as much wiggle room. It's getting tighter and tighter and tighter. So at some point, a little blip down is going to take me out. That's just my style. Because if I started with 100 shares, knowing it moves an average of $1 in a day, I have a $100 stop loss. That's my baseline. But if all of a sudden it's been moving and I'm now in 1,000 shares and it moves $1, that's a $1,000 loss. I can't let that happen to me. Right? I can't give back all those profits. So as my share size is increasing, that stop loss is not only moving up, but my share size is increasing as well. So I'm hoping, did that make sense, everybody? Did I just I know you could probably talk about something else. Did that make sense? Over time you sell your winners down and add on to your losers. What does the portfolio look like? Need to sell the losers and add the winners. Yeah. I mean, it sounds so boring and cliche, Brendan, to say, oh, you got to sell your losers and let your winners run. Yeah. But you also, as Alan points out, I think you need to load up on your winners. And when things are really moving in your favor, yeah, pile them. Because you might get that real big runner that just keeps on going. Awesome. I just tend to get, and it's a flaw of my style. It's just my risk management perspective as well, is I get a little bit too tight. So when I'm in all of a sudden a really big position, I'll get a little bit too tight with my stop losses. And I think that everybody's got to understand that. Let's say that your comfort level is, so when I started off day trading, 1,000 shares that was it. That was like my starting point for trades. I wouldn't even trade anything under 1,000 shares, right? Because I had my hotkeys set up for 1,000 shares. Buy 1,000 shares. Boom, done. When you have 1,000 shares of, let's call it, and I'll give you I'll start talking about a Microsoft story. I can't tell you the whole thing because it's going to be in the book, and you all got to read that story. But 1,000 shares of Microsoft, when this specific event happened to me, was trading at $90. So $90 a share. 1,000 shares is $90,000. That was already exceeding my account. My account at the time was probably $35,000, $40,000, something like that. So I was already in well over margin. Well, how do you think I felt when I'm in 1,000 shares of a $90 stock going, okay, I'm using all my money and then some. And then all of a sudden I'm in 2,000, 3,000, 4, 5, 6, 7, 8, 9. I'm in 10,000 shares of a $90 stock. I'm now in $900,000 worth of stock with a $40,000 account. Mind you, this is before all the margin requirement rules. How do you think I was feeling emotionally? I was an absolute freaking mess, dude. My stomach was turning. I was sweating. And it got bigger from there. That position got way bigger than 10,000 shares of that $90 stock. And that's a story for another day. But bottom line is, your demeanor, your personality, your attitude, your emotions will completely change when you're that far over your head and leveraged so much. It's a dangerous position to be in. And I think everybody here has probably experienced that emotional tingle where you're like, uh-oh. Oh man, I shouldn't be doing this, right? It's like standing on the edge of a cliff and you just keep leaning further and further over. You're like, oh, I was good when I was 5 feet back from the cliff, but now I'm like literally 45 degrees hanging over it. No bueno. So to me, that's how Bob does it. Scales in, but he also doesn't take big losers, Chuck. I mean, that's the point. You just can't take big losers. All right, Catherine, what about wood, the ETF mentioned in today's symposium? I don't know the components of this. It's just it's an ETF for timber and forestry. So there you go right there. I could actually, I used this the other day and it was brilliant. We were talking with John Rowland, who was from, I always mess this one up. It's from Bar Chart. Bar Chart. Let me bring this up real quick because I think this will be useful. B-A-R-C-H-A-R-T. Barchart.com. Okay, I had an ETF comparison. There we go. This is what I want to show you guys. Bear with me 2 seconds as I bring this up over here. Oh, the beauty of trying to do 37 things at once. And you guys, I do this all for the love of you guys. Here is that ARK Investments ETF, right? So let's just go in here and type in wood. just because I've never looked at the components of this wood. It's a Global Timber and Forestry iShares ETF. And it will tell you the constituents of it. So here you can see a lot of lumber manufacturing companies. So this is a great, if you're looking as a proxy for the whole industry, I noticed a lot of these names. Weyerhaeuser, West Fraser, Rayonier, Westrock, International Paper, not quite wood, but there's a lot of them in here. So this is nice because you're buying a basket of different securities that represent that industry. Yes, yeah, we talked about that, Chuck. They have absolutely horrible liquidity. Unfortunately, that's just the nature of some asset classes. I think I told you the story. I was actually on the floor of the CME getting a tour from a friend, and he goes, oh, here's the live cattle pits. And we looked over, and there's two guys. They were leaning on the railings like this. They weren't even trading. They were just so bored doing nothing. A lot of that stuff's automated. A lot of those pits have gone the way of the dodo and are no longer in existence. Okay. I'm going to wrap this up. I went over a bunch of stuff today, and I was actually planning on doing a very short show today because I'm knackered, and I want to go outside and enjoy a nice walk with the beast. Here's what I got cooking for Monday. For the U.S., you got consumer credit, and that's it. Japan is really the story of the day for Monday, but it's things like GDP, you have current accounts, and bank lending, and average cash earnings for the Japanese markets, and a 30-year bond auction. As well for the euro, German industrial production, and that is pretty much it. Not a lot of other important stuff happening for Monday. Also, not a lot of earnings announcements. There's really nothing to speak of for Monday. Let's see. Fly a lot slower. When does your book go on sale? You know what? Maybe I should have done that as my challenge. is finish my damn book. I don't know. You know what? It's funny because I get frustrated writing it to the stuff. It just gets boring to me, and I'm sure for some of you, you probably would love it. But I've lived it and talked it for so long, it just gets boring to me. So, let's see what else do I have. Never experienced anxiety until I started trading. Oh man, yeah. One thing that I think most people really need to work on. I think all of us, and including myself, and I've gotten really good at it, is dealing with that emotional roller coaster when you get in a big position or things start moving fast against you. It's all fine and dandy if you're trading something like Intel that doesn't move very quick, but man, you find yourself in AMC short at $20 and 30 seconds later it's at 40, and you got big size on. That's dangerous, and that's why I got to the point in my career where I was actually started trading really big, like huge, and of course you want that because you want to get big money. Then all of a sudden I'm starting to have health issues because of this, and I realize my health is way more important. And I can scale back to much lower levels and make a decent living just from trading without taking on all that stress. You really don't need to make that much money to have a decent living at trading, especially if you live out in like Thailand or something. So you should let us review your book. Sure. Next month's challenge, Thomasina. I'll put it down for next year. Yes. Oh, the Microsoft one. Oh, man. I'll just leave you with this one. The Microsoft story, I literally have a physical medical condition because of that Microsoft trade. Yes. Microsoft, and it's so funny when I'm sitting with the doctor and he's asking me all kinds of questions like, well, does this happen? Does this happen? Is this in your family? I'm like, thanks, doc. I know exactly what it is. I'm like, damn you, Bill Gates. Kevin, thanks, man. I appreciate that. I didn't know whether to go too deep on cryptos in this symposium today or keep it kind of high level, and I'm hoping that it came across with a nice transition and flow. So, all right, everybody. Well, thank you so much. Again, thank you for all your support over the time we've been doing this show. I hope you enjoyed today's show. I don't really know what I'm going to do next week with regards to guests. We'll see how it goes, but I'm going to lighten up a little bit because I have so much other stuff was done this week that it kind of bogged down my time. So hopefully I'll have some time to find some guests next week. That will do it. Keep your eye on cryptocurrencies this weekend for sure, given all that's going on with the Miami event. There is a Lex Friedman podcast, which I look at the guy and I go, you really don't do that great of interviews, but he did interview Vitalik Buterin, and if you get a chance, it's a 3-hour interview, by the way. I would encourage you to watch that one just to get an understanding of this young man. And the first time I saw Vitalik Buterin, it was one of the more awkward interviews I've ever seen. He was so uncomfortable. He was just he didn't know his role in life, I don't think. And he was just a real oddball. When you watch this interview on the Lex Friedman podcast, he really shows his maturity. And if we have the future in the hands of people like this, I think we're going to really accomplish good things. I mean, again, this guy gave away $1 billion to Indian COVID relief. The U.S. government didn't do that. Indian government gave some, but I mean, $1 billion just given away. This is altruism. And if you look at what he's building and the projects that are coming out of it, like Cardano, like Polkadot, like other products, you know, it's interesting how our world is shaping up and potentially changing for the future off of something a 19-year-old kid developed. Pretty impressive. So check that one out. All right, I'm going to take it from here. I'm going home. I'm going to finish this. I'm going to go home. I'm literally going to walk in the other room, grab my dog, and go for a walk. But I'm going to finish this glass of whiskey. I hope you guys have a fantastic weekend out there. If you like the show, obviously give me a thumbs up. If you are new to the program, hit that subscribe button so you'll know when this shows come on. We'll see you guys Monday. Have a great weekend, everybody. Take care.